This is Share Shootout. It's mean, it's vicious, it's backbiting, but tonight, with a gentler touch. All will be revealed in a moment. I'm Bruce Whitfield. You're watching CNBC Africa, first in business worldwide. Now, if the world is experiencing a global wine shortage, does that mean that pop-suck wine companies are a buy? How does growing a moustache for Movember raise awareness for prostate cancer? And can the EFF actually even afford Dalian Porphyry? All of these questions are really difficult. We don't know the answers to those puzzling questions, but what we do know is we've got guys walking around with L plates on their backs. This is where if we had a violin, we'd start playing. Introducing the champion with 2 appearances, 1 win and a loss. Andrew, I'm about to go on paternity leave. I can't breathe, nor can my wife. Dittberner. He takes on the champion with 8 appearances, 5 wins and 3 losses. Gary, I'm here for wedding advice. Booysen from Vunani Private Clients. Okay, house rules time. Both of our guests have pre-picked 3 shares. Neither knows what the other holds, but they must accept at least one of their competitors' stocks. The longer they leave it, the more likely they are to have to accept something they really don't like. Each has got 30 seconds to argue their stock pick. So now that we know the house rules, I just have to ask you, Gary, what obsessed you to propose in the croup?
No, it's I don't know.
You were in a troop of baboons and you said, you can have any one of these or you can have me, dear.
Yeah. No, it was Garden of Eden-esque. My girlfriend's an archaeologist.
You were wearing what? Okay. And the less we do about this. How far apart are the contractions at this stage? Because you guys are at the cutting edge of this thing.
They're getting closer.
Awesome. Okay, well, let us not waste any more time. You might want to come and hide here quite often, incidentally, because you're about to have a baby. Andrew Dittberner, let's go with you, because you are the reigning champion. I like your first pick. I think it's adventurous. I think it's cheap. And I think it's for the long term, because that's what you like to do. Give me 30 seconds on Trencor, please.
Trencor, yeah, it's a very simple business. They own just short of 50% of Textainer, which is the world's largest container leaseor. It's listed on the New York Stock Exchange. It's a high quality asset. If you look at what it's done over the past 30 odd years, 27 years, it's been profitable. 24 years, it's had a growing or stable dividend. And the global depression hasn't really hurt them. 95% utilization rates of their containers over the past year. 75% of their containers are on a long-term lease, which is 5 years or more. So they've got that look through or that visibility.
At the risk of giving him some extra time, I just have to ask one question. If it's so blimmin' fantastic, why is it so cheap?
That's a very good question. We like it. It's done exceptionally well. When you look at the returns it's generated over the past year, I think it's probably undervalued at the moment. The global economy is slightly depressed. There are concerns around the large superpower emerging markets. However,
before you argue against yourself completely, let's let Gary do it. Are you a Trencor fan, Gary?
No, I mean Trencor is one that's sort of popped up on our radar a couple of times now. So we do actually like the business. So yeah, I think the container business it's something that can pick up a lot. I mean, especially with global trade, etc. We're looking at it improving. So I think it's not a company that we've looked at in a huge amount of detail, but on the face of it, I probably would accept it. I mean, I'd accept it.
But we're in a situation though where global trade is under a bit of pressure. Chinese numbers keep doing this. We're not too sure where the demand is going in China, although it seems fairly steady at 7.5 or 8% growth. I mean, that is surely enough to sustain global trade on the basis of the way things are going at the moment.
No, specifically, and I think if you look at South trade in particular, there's nice volumes going through and there's growth, or we're seeing growth at the moment.
I came across something the other day which may go against your South-South argument, and I was introduced to the Fragile Five. Being a big Five fan of there, Gary would be familiar with the Fragile Five, and it's not the rhino because it's fragile. It's not endangered animals, but it's countries that have got twin deficits, and amongst those are 3 BRICS members, and that is Brazil, India, and South Africa. All of us have got double deficits. We've got a problem on that particular front. Those 3 economies part of BRICS, and that's supposed to be supposed to be the sort of saviors of the world economy, Gary.
Yeah, I don't know. I still think, I mean, the global economy's got a long way to go before it's, right as rain. And obviously the BRICS economies are under pressure. But I mean, in a world where you've got the Eurozone still very much mired in stagnant growth. The US, yes, improving quite dramatically. I mean, where are you really going to look for growth? It has to come from emerging markets and frontier markets. So despite, being fragile nations, I mean, this is where, in an environment of very low rates, I mean, money has to go there to try and find yield. So I think you are going to see investment, you are going to see development.
You're playing your hand early. You're giving Trencor the thumbs up. There we go. Trencor gets the thumbs up. He's playing nice this evening. So Gary Booysen from Vunani Private Clients. A tall order for you is, I didn't realize the multiple on this one was as low as it is. That is surprising. It's not as dumb as it looks. I'm not talking about Gary, incidentally, the pick. Vodacom in 30 seconds.
Yeah, Vodacom, I mean, traditionally we would look probably at an MTN, but I mean, looking at it, like you say, looking at the PE and the forward PE, you're looking at 12, 13, it's not particularly demanding. The dividend yield is higher than MTN as well, so you've got some good metrics there. I mean, looking at the company, there are some, acquisition opportunities. You've already had Orange sort of sniffing around and looking for Vodafone's, at least African businesses. I think there really is an opportunity there. I mean, obviously, it's entrenched, it's a natural monopoly, and it's entrenched in South Africa. It's done what it does well.
You hear that
and
boom
I think it will
thing?
carry
You know
on
that
going.
boom thing at the end? That means stop talking.
Right.
Okay, this one should be right up your alley. Vodacom should be sitting in the value set of the market. It trades on a dividend yield, historical dividend yield of nearly 6%. It's on an historic earnings multiple of 13 times. Even by your metrics, that's not expensive, Andrew.
No, it's not expensive. I think the thing that we really like about Vodacom is the yield that you get from it. It's very cash generative, and they've been passing on, I think it's got a dividend yield of 5%.
Yeah,
or
6% according to my numbers here.
Yeah. So from that perspective, we really like it. They need to reinvent themselves, and we've seen them doing this. They've just, they're trying to buy a Neotel, and that's obviously for the data capabilities that Neotel brings in this fixed line. So I think not as exciting as an MTN with exposure through Middle East and Africa, but value managers aren't always after something exciting.
Not always exciting, not always after exciting.
So Vodacom, I think will play nice here. And,
it is interesting because the cell phone business model has had to adapt. There was a stage where nothing would stop their growth, and these things were running and they were acquiring customers. Customer growth has now finally stagnated a bit. Data, small, but a growing proportion of revenue for these cell phone companies, and more of us are carrying around things like this, which chow bandwidth.
100%. I mean, if you look at bandwidth over, I think it's the last year, it's increased, or at least data usage. The average data usage increased something like 75% in the last year. So, I mean, there's no question that you are seeing good growth in data, but this is something that's been talked about for a couple of years now.
But finally, it's coming.
And it's coming. I mean, I think Vodacom's data was about data revenue across the group was up, I think, 28% in the last earnings report. So, I mean, yes, data is growing, but I mean, Vodacom also, it's not just the data story. I mean, you look at also, yes, it's got sort of a tenuous relationship with Vodafone, but that relationship really has given it, I think, an advantage in the South African market. Vodafone is used to dealing in the European economies. Now it can translate that sort of expertise into a more saturated market like South Africa, and I think they're going to keep their top spot.
Is the Vodacom founder Alan Not Craig now wearing the wolf's clothing at Cell C not a problem?
From our side, I mean, looking at it, Cell C is still struggling with capacity and sort of network access. So, as much as obviously the MTR rates are going to affect MTN and Vodacom as the incumbents, I don't think to the extent that perhaps the market is expecting, because Cell C can't just explode overnight. I mean, yes, it's got an advantage for the next couple of years, but I have faith that the likes of Vodacom and MTN, they're not just going to give up and die. They're going to be there, and as incumbents, they still have a massive advantage.
Let's let Andrew Dittberner deliver his prognosis. You're giving it the thumbs up, I suspect.
I'm
reading your body language.
Yeah.
Okay.
I'll accept this.
You'll accept Vodacom on 171 billion rand market cap. These companies are absolutely enormous. 20 years ago, they didn't exist. And today, we can't survive without them. So Vodacom gets the thumbs up. Let's then move, Andrew, onto your second pick for this evening here on Share Shootout. Omnia, 14 billion rand market cap. This is fertile ground, and Gary is laughing, and he'll tell us why in a moment. 30 seconds why.
Makes me nervous. I think the strength of the business is that it's got three different segments. It's got its mining business, agricultural business, and chemical businesses. When one of them don't fire, the other two tend to fire, and that's what we're seeing at the moment. The agricultural and mining businesses, which is its explosive businesses, are doing really well at the moment. They're moving into Africa. Africa has open pit mines, which need explosives, so they're doing really well there. Africa has two industries, essentially, agricultural and mining. So that's a very nice fit for them. They've just completed their nitric acid plant.
There we go. The reason you're laughing is because if I remember correctly, not so long ago, you may have picked this one.
Why did I accept Trencor? Yeah.
So you can't really shoot it down now, can you? Because how long
I don't know.
ago
Have you
did
been
you
looking
pick
at our
it?
fun fact sheets? No, we think Omnia is a fantastic business. I think if you run it through a value, even a momentum metric sort of stock picking model. I mean, you look at it increasing earnings. It's just doing everything right across the board. It's in a great sector. It's going to be very difficult to shoot.
Let's talk about the positive. You don't have to shoot it down.
Yeah.
You can accept it. I know it burns you and
yes.
upsets you. You made the schoolboy error of going for the first share because you like it. But let's look at this story, because the breadbasket story is an obvious one. The African continent is being sought after by many sort of land grabbers around the world looking for fertile ground in which to plant. Is there not a risk on the African continent, however, if I am China PLC and I'm buying up 5% of Africa's land space to plant crops, that I might just bring my own fertilizer?
Yeah, I guess that is obviously a risk. However, I think to get fertilizer from South Africa up into Africa is probably a lot easier than it is, and cheaper perhaps, than Chinese shipping it over all the way from China. So at the moment, I think they become entrenched there. They've just completed, as I was saying, their nitric acid plant last year, which allows them or gives them cost efficiencies in producing fertilizer for agricultural land throughout Africa. So I think they've got that advantage as well. Sorry. And on valuations of P of 16, I don't think it's a screaming buy, but with a return on equity just short of 20%, I think you might.
It's massively profitable. They will grow into that.
Exactly.
They will grow into that multiple. It's a good story. Gary has to accept it.
I have to accept that. And it's not just a fertilizer business. I mean, most of it, like you were saying earlier, comes at least about a third comes from mining. So, and if you do see, perhaps that's where you can maybe pick some holes in it, because the secondary mining division has been fairly good, but how long is that really going to continue if we see a proper slump in global commodities? But I can't.
You can't shoot it down. You can't shoot it down.
Yeah.
So for the first time ever, he's accepted 2 shares, and he's hating the game so far. Let's see whether or not you've destroyed his big game temperament, and whether or not he can sell you 2 of his picks this evening, because your next one is attractive. It's very nice. It is the most popular retailer on the JSE. It's too rich for his blood, so I know he's going to shoot it down on that basis. But he's going to find it hard to shoot down Mr. Price. 30 seconds while you like.
Yeah, Mr. Price, we're looking, specifically at the rest of my portfolio. I have to go with something a little bit more adventurous. And yes, it is a high PE stock, but we're quite confident that it can keep on growing earnings at around 20%. It's obviously it's a value play out of the fashion retailers. You're seeing you are seeing an emerging middle class in South Africa. So you're seeing, and now perhaps with the consumer under a bit of pressure, you're seeing the buying down from the Fashinis and the Truers into the likes of Mr. Price. Add to that, huge efficiencies being extracted out of their supply chain management, which really is expanding their margins. That has nothing to do with, that has nothing to do with consumers.
It's that boom sound.
I have to. I've accepted 2.
He's desperate. Oh, he's peddling. You're going to say, it's lovely. I buy all my clothes at Mr. Price, you're going to say to us this evening. My unborn baby's entire wardrobe comes from Mr. Price. But it's on a price earnings multiple of 25 times.
Yeah, it's the same argument. Great business, great investment, and I'm not so sure Mr. Price is a great investment at current multiples.
Why not?
To justify the multiple that it trades on at the moment, when you look at a PE ratio, this needs to, as Gary says, it's going to produce good earnings. It doesn't need to do good earnings. It needs to do exceptionally good
But I'm
earnings.
going to pause there just for a second. Hold that thought. When last did Mr. Price trade below 20 times?
No, it's been a long time.
I can't remember. You can't remember. Okay, so you acknowledge and you admit, Your Honour, that this thing doesn't trade below 20, maybe even 25 times historically. So on that basis, you can't just shoot it down because it's expensive. It's always expensive, and it's expensive because it's fabulous.
Yeah, you pay up. I agree. You do pay up for a good quality business, and you would expect quality businesses like Mr. Price, SAB, etc., to trade on multiples above the market average. But to justify, when you look at the retailers, the clothing retailers across the board, Mr. Price does have advantages. It is mainly a cash retailer, which is an advantage to it. But to justify multiples of, I can't remember exactly what it's on, but I'm guessing somewhere around 30 times.
That's 25. My number
25 times.
24.89.
For a value investor,
when last did they make a mistake?
I can sit here and talk.
When last did they make a mistake?
They haven't made a mistake in a long time. But
so they're due one.
They do one. They're long overdue one. No. It's not about making mistakes. This is a great business. From a value point of view, a value investor, we could not justify or go to our clients and say, here, we're a deep value manager, yet we're holding a stock that trades on a of 25 to 30. Unfortunately, I'm shooting it down.
He's shooting it down. He likes the business. He buys all of his clothes there. His newborn baby, soon-to-be newborn baby, gets all of its clothes there. Do you know what flavour you've got?
It's a girl.
Oh, excellent. She's going to be absolutely fetching in Mr. Price's summer ranges this year, and you're in so much trouble. Okay, Gary Booysen from Vunani Private Clients, Vodacom and Mr. Price. Vodacom accepted. Mr. Price, lovely business, and Andrew really likes the business bit at 25 times earnings, despite the fact that it's seldom traded below that, and certainly not below 20 as far as we can tell in a very long time. If you can help us, tweet me at Bruce Business and just let me know when last Mr. Price did trade below that level. That would be helpful. And then Andrew Dittberner from Cannon Asset Managers is playing a crafty game this evening. Trencor, market cap of 12.5 billion rand, gets the Gary Booysen thumbs up, and also Omnia gets the thumbs up. Why? Because not so long ago, Gary told us what a wonderful idea it was to pick Omnia. So we've got a schoolboy error in play this evening. Will that, or will it not, count against Gary Booysen this evening? Will Andrew Dittberner have to leave the maternity ward at short notice next week as we wrap up the season, as we head toward the wrap-up of the season here of Share Shootout? But all that and a lot more coming up in just. This is Share Shootout here on CNBC Africa, first in business worldwide. We're picking shares, we're shooting down the rest. And before the break, Andrew and Gary each gave us their 2 stock picks so far this evening. Andrew Dittberner from Cannon Asset Managers gave us Trencor and Omnia. Gary Booysen accepted. And Gary Booysen from Vunani Private Clients, your Vodacom pick was picked and Mr. Price was shot down. So Gary, this part of the show, you will go first into the home stretch. I'm interested to see whether even Captain Value over here can shoot down your next one, because it will be a hard one to shoot down. The share's sticking above $500 a share. It's doing rather nicely. Big project in the United States, which if it comes off, will be a game changer par excellence. I understand that recently some letters have been sent to staff saying, would you like involuntary redundancy, please? So that's a nice Christmas present from Sasol. So here we got Sasol, market cap of 333 billion rand, trades on a multiple value at 12 times. In 30 seconds, tell me why he can't shoot it down.
No, you can't shoot Sasol down on a value point of view. I mean, it's a great cash generator. It's obviously got, like we said, all the exciting stuff happening offshore with the gas to liquids projects, which are lower margin than their coal to liquids, lower setup fees, and there's more abundant natural gas, and it's on a much larger scale. So great earner, and something that, I mean, if you look at it, we did some pricing on it. It doesn't look like it's priced into the share yet. So if it does come off, huge kicker for the share price. On top of that, you mentioned Project Phoenix, huge cost-cutting initiative, saving probably 3 billion.
You're desperate, I know, but you can't go over. Okay, now, Andrew, I'm interested in this one. Are you going to be a good sport and accept it, just to make our lives unpleasant and ungovernable and really difficult to kick Gary off? Or are you going to make a valiant, manly effort to shoot down Sasol so we can all laugh at you?
I'll keep him in suspense. What I will say about Sasol is I think this Louisiana project is a huge project for them, and there's going to be a polar outcome here. Either they get it right and it's hugely successful, or they get it wrong and they overspend, run over time. I know it's a long way out, but you'll see the Sasol market cap fall significantly. I think that the expected capex on that's about the market cap of Sasol at the moment. So it's massive, and that's a massive risk that they're taking on there. And I think, although it's a long way out, the fact that management are doing this highlights that they're prepared to take these big risks, which for us would be a question mark. Surprisingly, they talk about doing this big project in America, but they say all their growth is coming from Asia. Why aren't they doing this in Asia? I know they want to become a global energy player, but these are some of the questions that we have around
there. Gary,
Sasol.
defend it. I mean, if the growth is Asian, why are they wasting time in America? Do not run the risk of doing an Old Mutual, a Sage, a Discovery, following the insurance trap into North America.
Yeah, I mean, of course, you've always got, with a project of this size, you always have risk in how it's executed. But if you look at it, I mean, Shell has also just come out. They've also just put down, they can also have, I think it's about it's between a 14 and 16 billion capex, also in Louisiana, building also, the same sort of ethylene bean cracker or whatever, specifically, in that area, because there is a massive demand there. So from our point of view, I mean, yes, it is a risk, but business is a risk, and it's a calculated risk by Sasol. And I think, looking at Sasol's management at the moment, I think the management is exceptional. And I think, I don't know, there's been all sorts of comparisons to sort of Neutron Jack Welch at the moment, though, with all the employees that might lose their jobs in South Africa. But in general, I think it's a good management team that should see the project.
This is a business that's being reshaped for a global environment, not a South African parastatal started, funded, taxpayer-backed, IDC paid for Sasol, which so many people get cross when the petrol price goes up when that happens. Tell me why you're going to accept Sasol.
I'm going to accept Sasol.
You are going to accept Sasol.
I'm going to accept it.
He's making life unbearable. All right, no, this is about me, is it? Okay.
We hold Sasol in our portfolios. I just highlighted a few of the concerns that we have. From a value point of view, we think it's probably closer to fair value. It is a gamble on the South African oil price, or the Rand oil price rather. As you see, the Sasol share price follows the South African or the Rand oil price. So if you think the Rand's going to weaken, you could argue you should be holding this.
The Rand and the oil price are two things over which Sasol has no control. It has control over how it can leverage that position through making smart and through doing clever stuff.
Exactly.
And this is clever.
And they can do it, and they've got the technology to do it. Exactly.
Will it cause them to implode?
Yeah. So, but from our point of view, we've got Sasol in the portfolio, so it makes it very difficult for me to shoot it down.
Well, for the first time ever, I think we got 2 and 2. So where are we going to the final stretch this evening? We've got Gary, who's had Vodacom and Sasol accepted. Mr. Price shot down, but reluctantly, I think. Andrew Dittberner, who's had Trencor and Omnia accepted. I think it's going to be quite easy for Gary to shoot down your final one, but I'm willing to see you give a valiant effort. 30 seconds on Sasol.
I think if you look at the big four banks, they at 52-week highs, and where's the growth going to come from? The new normal where you've got these high cost bases for all the banks. And I think the second tier banks is where you can look, and I think Sasfin is probably the standout one there. These guys do lending to small and medium enterprises, which the big banks don't go to, or they don't go into that space. Have sidestepped the unsecured lending issue. They're moving into transactional banking. 70% of the earnings is from non-interest income, which makes it a lower risk profile than your big four banks.
There we go. But big four banks are running. They're running hard. They are sitting in record territory. Standard Bank's at nearly 130 bucks. We've got First Rand, we're pushing 35, 36 Rand. Nedbank is going for 220. ABSA even, Barclays Africa has even found a little bit of life in it as well. But the big banks are running. And a lot of the time you'd say, well, get on the winning pony and ride it. I just don't see where growth prospects are coming from the big banks. So Sasfin is interesting, but it's had a good run recently. It's gone from like 30 to 37, 38 Rand a share. Have we missed out on this one, Gary?
Yeah, I think Sasfin also, it might be a little bit of a case of, the big banks are running, let's go and look somewhere else because, they must be good. And you're almost picking the second player because the first player, it's a little bit maybe expensive for you. From our point of view, we were not value managed. We're very much momentum based. You buy things that are going up and with the expectation that they'll carry on going up at least for a while, and you're trying to capture that. So, I mean, from our point of view, we would rather buy a First Rand at this stage. And I mean, even then, if you do want to really take on risk, go and buy, if you're looking for something a little bit alternative to the big banks, I would go for something like Transaction Capital, or something a little bit, really trying to, make niche, carve out little niches for itself in financial services. Sasfin, I don't know, I've been to their offices, I don't want to buy it.
Oh, he's mean. Oh, he's mean. But this is a bank that should be so exciting. This is the guys who say, we've got to come from a trading background. I think they traded cloth or wool or something in the early days of the business. Sassoon Senior did that. And these guys, back entrepreneurs.
Yeah.
So why is that argument fair in terms of Sasfin?
I don't think it's a case of the big banks are expensive, so let's look elsewhere. We've held Sasfin for quite some time. If you're looking for momentum, Sasfin, there we go. The share price has done exceptionally well. So you've got that value bias. It trades on a price to book of 1.3 times. As I said, they're moving into transactional banking, so there's growth. They've got their stockbroking, their wealth management, corporate finance divisions, which are small.
And they've got David Shapiro.
I wasn't going to mention him, but
it's probably a good enough reason to shoot him down, eh, Gary?
I have to.
He's shooting him down.
Principle.
He's shooting you down. But that's what an interesting game it's turned out to be, because what we've got is 2-2 in the stock picking the stakes. So now we've got to pick a winner. Producers, at any point, please feel free to speak in my ear and tell me your view that I can ignore. Andrew Dittberner from Cannon Asset Managers, Trencor, Omnia and Sasfin. Sasfin majestically shot down from a guy who's been to their offices. Have you been to their offices?
I've been to the offices.
I've been to their offices too. And then Gary Booysen from Vunani Private Clients, Vodacom, Mr. Price and Sasol on Gary's list. Vodacom and Sasol getting the thumbs up. Strong case being made for Sasol, and Mr. Price getting shot down. So let's take a pregnant pause. That's a joke about you, incidentally. And let's decide who we're going to shoot down. Producers, have we got a verdict? Have we got a verdict, producers? Have we got a verdict? Andrew Dittberner. They say, I don't think they were speaking, but there were voices in my head. Andrew Dittberner going off to hold his wife's hand. He'll be here next time in a plaster cast. Remember, I host a Battle of the Stock Pickers on next week's show, right here on CNBC Africa. Next Tuesday, the most vicious stock picking show on TV by a hair's breadth, by a snail's pace, by the tiniest margin of error in the history of the show. Gary Booysen gets to survive to fight another day. Do tweet me or share shootout suggestions, your thoughts on @BruceBusiness. Join us again next time as we continue to pick out a winner and shoot out the rest. Until then, good night.